Welcome back to Doc versus IRS episode number 5. Today we head to LaCrosse, Wisconsin to meet a dentist who told his patients to pay in cash or with checks made out to cash with the pay line left blank. And then he had his mother walk those checks into the bank to deposit them for 4 years. This is United States versus Kriemelmeyer, and it is a playbook for how federal cash skimming prosecutions actually work. So, if you have any cash paying patients, this is the most important episode of the series so far. Let's open the chart and gloves on. Dr. Frederick Kriemelmeyer was a self employed dentist in LaCrosse, Wisconsin. He owned and operated his own dental practice, a real practice, real patient, and real income. But the problem? On his 2000, 2001, 2003, 2004 tax return, he reported gross receipt substantially below his actual income. Across those 4 years, IRS determined that he underreported by nearly 400,000 with a tax loss of 140,000. A grand jury indicted him on 4 counts under Section 72061 based on falsifying tax returns. And he went to trial, he represented himself, and then guess what? He lost 3 years in federal prison. Now, here's where the case gets weird and frankly instructive. Dr. Kriemelmeyer didn't just hide income. He had this whole philosophy about why he didn't owe taxes. He believed his dental practice was an occupation of common right, a sovereign citizen tax protester theory that has been laughed out of the federal courts for 40 years. He also tried to get a man named David Wynn Miller, who called himself a plenipotentiary judge, appointed as his legal counsel. Mr. Miller was not a lawyer, not in Wisconsin, not anywhere. The court denied that motion. Dr. Kriemelmeyer represented himself, got convicted, he appealed and lost, and filed a writ of error coram nobis from prison. Lost. The court literally directed the clerk to route his future filings directly to chambers without docking them. The judicial equivalence of get the heck out of my ER order. Here's how the cash scheming worked. And I want every dentist, plastic surgeon, derms, anyone with cash paying patients to listen carefully. Dr. Kriemelmeyer told his patient to pay him in cash or with checks made out to cash with the payee line left blank. So he would often put a little star next to the amount in the patient's record. And here's a kicker: the star meant the patient had paid him 5 times the amount he actually wrote down. So if the procedure costs 1,000 and the patient paid him 1,000, but the chart would say 200, and tax return would report $200. So only 20% of the amount received. He also had a barter scheme. Patient would buy silver from him in cash and then barter that silver back for dental services. And he claimed bartering wasn't taxable income. Oh my gosh. So let's step back and talk about the bartering income. So Internal Revenue Code 61 defines gross income as all income from whatever source derived. And Treasury Regulation Section 1.612-2D specifically addresses bartering. So both state and federal tax authorities has sent them letters telling him exactly that. But he ignored them. Now the cherry on top. So he had his mother cash the checks at the local banks for years. She would walk into the bank, deposit checks made out to cash, and walk out. Bank employees noticed. Bank employees got suspicious, and bank employees filed suspicious activity report, what the industry calls SARS. And those SARS landed on the IRS desk. In December 2004, the IRS executed a search warrant at his dental office. Game over, man. So the case is a textbook of how the federal government builds a tax fraud prosecution. So DOJ stacked four pillars of evidence, and I want every healthcare professional listening to this to understand each one of them, because the same playbook applies to anyone with unreported cash income. So pillar number one, the patients themselves. The government called former patients to testify, and they confirmed under oath exactly what they paid Dr. Kriemelmeyer for dental services. They confirmed the cash only request. They also confirmed the silver bartering scheme. Your patients are not loyal to you when the FBI or IRS Criminal Investigation Division shows up at their door asking questions. They'll tell the truth, and truth will come out every time. Pillar number two, his own records. The IRS seized his patient records during the search warrant, and those records had the stars next to amounts. Those stars match what patients said they actually paid. And defendant convicted himself with his own handwriting. The lesson, if you keep two sets of books, the IRS will find both. Pillar 3, the bank deposit. The government did what's called bank deposit analysis. They look at every dollar that went into accounts the defendant controlled and compare that to reported income. And the gap is unreported income. This is the most common and most devastating tool in IRS criminal investigation division's arsenal. It doesn't require a confession. It doesn't require a whistleblower. It just requires bank records and a calculator, both of which they got. Pillar number 4, the warning letter. The IRS has sent Dr. Kriemelmeyer letters telling him his bartering theory was frivolous. State tax authorities had done the same. He had been warned in writing that his position was wrong. But this guy proceeded anyway. This is the same pattern we saw with Dr. Ulibari in episode 3, a written warning from a credential source, ignored, becomes Exhibit A in the prosecution. It transforms a case from a tax dispute into willful evasion. It transforms negligence into a crime. So now let's bring this home for the physicians and dentists listening. Cash paying patients are increasingly common in healthcare. Cosmetic, dentistry, Botox, fillers, IV therapy, weight loss, concierge primary care, mobile aesthetic, now stem cell treatments, functional medicine, that's hot, cash pay psychiatry. Every dollar of cash income is taxable. Every single dollar. There's no de minimis exception. There's no cash doesn't count rule. There's no magic threshold under which it disappears. The Internal Revenue Code Section 61 defines gross income as all income from whatever source derived. Cash is a source. Bartering is a source. Silver is a source. Everything is a source. And here's what every cash receiving practice needs to understand. There are also Section 6050I cash reporting requirements. So if you receive more than $10,000 in cash from a single patient or single transaction or in related transactions, you have to file Form 8300 within 15 days. That's not optional. That's a separate criminal statute if you don't. Now, do most practice hit that $10,000 threshold? Probably not. But the principle still holds. Cash is visible to the federal government. The bank you deposited it into files report. The patient who paid you sometimes mentioned it on their tax return. The credit card processor that handles your other payments creates a footprint that the IRS uses for comparison. So if your patient mix is 80% cash and your reported income looks like a 20% cash mix, the IRS notices. Not because they are psychic, because they have the data analytic teams whose entire job is comparing reported income to industry benchmark. So now I want to spend one quick minute on sovereign citizen part of this case because it shows up in healthcare more than you would think. Dr. Kriemelmeyer's defense ultimately was that his practice of dentistry is an occupation of common right and as such is not taxable. He also argued that paying taxes is voluntary. Oh my gosh. That 72061, which has to do with falsifying tax return, doesn't have the force of law, and that he wasn't subject to the tax law. The Seventh Circuit's response is one of my favorite quotes in tax law. They said, these arguments are frivolous when first made and have been rejected in countless cases. The court calls them, and I'm quoting, frivolous squared. If anyone, a friend, a patient, YouTube video, tax strategies on Instagram ever tells you that taxes are voluntary or the 16th Amendment was never properly ratified or you're a sovereign citizen exempt from federal jurisdiction or your profession is an occupation of common right, run. Run. These theories don't work. They have never worked. Federal courts have rejected them so many times that judges now sanction the lawyers who raise them. They are the dental equivalent of someone telling you your cavities don't really exist if you just believe hard enough. I got 3 discharge instructions for you. Lesson number 1, all cash income is taxable, period. There's no minimum threshold under which it disappears. There's no special rules for bartering. Every dollar flows into practice, regardless of the form, is reported on your return. If you accept cash, your bookkeeping system needs a cash line, and that line needs to match your deposits. Lesson number 2, the IRS detects unreported cash with bank deposit analysis. They don't need you to confess. They don't need a whistleblower. They just need bank records and a calculator, both of which they already got. So if your reported income doesn't match the dollar flowing to your accounts, the gap is the case against you. And practices with mostly cash income raise red flags automatically through industry benchmarking. Lesson number 3, tax protester theories are not a strategy. They are a sentencing enhancement. Every sovereign citizen, common law, or your wages aren't income argument has been rejected by federal courts over and over and over. So raising them doesn't make you brave. It makes you the third defendant this month the judge has seen with the same ridiculous argument. And he tells the prosecutor your tax position was willful, which is the exact element they need to charge you criminally instead of civilly. So here's my final thoughts. Dr. Kriemelmeyer told the court he had studied law on his own and had been following tax related issues for the past 15 years. He represented himself at the trial. He cross examined IRS agent. He argued his own appeal. He filed petition after petition from prison. He had plenty of confidence. He had zero competence. And the federal court system handled him exactly the way it was designed to handle people who confuse the two. Self representation in a potentially criminal tax case is the legal equivalent of a patient who reads WebMD for 2 weeks and then try to perform their appendectomy. You could do it, the outcome will be predictable. So don't be Dr. Kriemelmeyer. Report all your cash, trust your real tax professional, and if anyone tells you your dental practice is an occupation of common right, smile and run. Run fast. I'm out.